Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So welcome back to another video of weekly index review, and in this video we're going to take a look at how this week went by and key levels to watch for next week. So before starting the video, standard disclaimer: I'm not a SEBI registered analyst and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or investment. So let's begin. First, we're going to take a look at Nifty 50, the main index of Indian market. So this is the weekly chart. As you can see, we're going to take a look at the broader trend. As you can see, the broader trend has been up. As you can see, it's up in a kind of a straight line. As you can see, the broader trend is up. Nothing to worry about. As long as this level is not breached, as long as 15,430 is not breached, till then it's bullish trend. Nifty is in a bullish trend, and if it goes down from this, then there's a chances that the trend is going then the trend will turn bearish and there would be chances of a bear market. So till then this level is not crossed, everything is fine. So let's get down to daily chart and see how the week went by and key levels to watch for next week. So this was the previous week. Stock went sorry Nifty went up one day and again formed a negative pattern here. This whole pattern is evening star, formed evening star on daily charts. As you can see, this whole pattern is evening star, and it is also forming a broader pattern. If you can see it from, if we connect from this level to this level, as you can see, it's kind of forming a head and shoulder pattern. As you can see, left shoulder, head, right shoulder. So right now it hasn't given a clear breakdown. It went down on Friday, but it didn't give a close below the trend line. As you can see, this trend line, it didn't give a close below this trend line. So as long as it's above this level, there's not much to worry about. And if in case, which is very much possible, if it gives a breakdown, then first level to watch would be 17,600. So this would be our first support level, and the second would be 17,254. So these are the key levels to watch. So our first key point is first support level would be 17,660, and our next support would be around 17,250 rupees. This would be our two key support levels. As you can see here, this level, if in case it breaks down, it gives a head and shoulder breakdown. This would be our first level and this would be the second level to watch for. So keep these levels marked in your chart for next before taking any trade the next week. So right now the short-term trend like 1-2 week trend is, you can see, negative. It's forming lower high, lower low. It hasn't formed another lower low. If in case it breaks this level of 17,600, then it would be second lower low. And as long as this level is protected, there's not much to worry about. If in case it breaks the level of 17,250, then the medium term trend would be bearish. So keep these levels marked in your chart and trade accordingly. So next index we're going to take a look at is the Bank Nifty. As usual, first we're going to see the broader trend on the weekly chart. As you can see, it's not as strong as Nifty was. As you can see, Nifty had a chart like this kind of movement. Nifty had this kind of movement. Bank Nifty is not that strong, but still it's in a bullish trend, and right now it's in a uptrend. As long as it doesn't breach this level of, as long as it's above this level of 33,000 or 34,000, as long as it's above 34,000, everything's fine. If in case it breaks these two levels, these two are important levels for the broader trend. Right now the broader trend is up, it's still bullish. If in case it breaks the 34,000 and 30,500 level, then the trend would be bearish and there would be chance of bear market. So this was the broader trend. Now let's go down to daily time frame and see how the week went by and sorry, how the week went by and how next week would be. As you can see here, uh, Bank Nifty is weaker as compared to Nifty. Nifty uh, gave a nice pullback in between, but Bank Nifty is clearly falling. But Bank Nifty is heading for a very nice support, as you can see here. So this was the Fab 2021 high. After that, Bank Nifty declined some 7 to 10%, and again it came back up and it gave a breakout around October. Then it went up around 41,000, 42,000. Then it's kind of a pullback. Right now it's giving a pullback. So these levels would be there are chances of a reversal. As you can see, it's right now giving a pullback. Right now it's giving a pullback, and there are chances that it can consolidate a bit at this level and then head up, and it can give a clear reversal from this point and it can again head up. So to confirm the reversal, as if in case it crosses this level of if it case it crosses the level of 39,117, then that would confirm the reversal. And if we see any bullish candlestick formation here, like a bullish engulfing or a morning star, then that would also add to conviction that the trend is reversing. Right now the short-term trend is clearly negative. As you can see, it has fallen from 41,800 to 37,900 something. So these two levels these mainly three levels would be the key levels that you should watch for. Our first level is around, that would confirm the reversal, that is around 39,117. That would be the reversal confirmation, and this level is our support zone right now. As you can see, 37,700. This is our first support. 37,700 is our first support, and after that 37,230 is our second support. So there are chances that it would most probably reverse from here. Just it can come down here and it can give a reversal, because the whole banking sector will perform well if there is no third wave or something. So these are the key levels to watch for. 39,117 is the reversal confirmation zone, and if it reverses from the support zone of 37,700 and crosses the level of 39,117, then that would confirm the reversal. So now let's take a look at the mid caps and small cap. This is the mid cap 100 index. If we go down to weekly chart, as you can see, the trend is even stronger than the Nifty, and it hasn't given a decent pullback. Like, it hasn't even given a 10% pullback till now, so the trend is completely bullish. So let's go down to daily time frame. As you can see, the short-term trend is definitely negative. 2-3 weeks back, it gave a pullback of around 5-7%. If we from this side to this, so around 10% pullback, then pullback, and then it went up, and now it's again coming down. As you can see, the Friday's candle is not very encouraging. It's a big candle. So right now the short-term trend is for the mid caps is clearly bearish. Sorry. So the first support level to watch for would be this level around 20,830. So there are chances that it can pull back to this level again and then again head up, and if it breaks this level, then this would be our next support level of 28,850. So, and for a reversal confirmation, for a reversal, in case next week it turns up from here, it has to cross 32,260. So for the trend to change to bullish, because in the short term trend is clearly bearish, as you can see, the big candle, big wide range candle has formed on the daily charts, and the short term trend is negative. So these are our key levels. This is reversal confirmation level of around 32,260 rupees. That would be our reversal confirmation. If it resumes the bullish trend, then it has to cross this level, and our first support zone would be around 29,840 rupees would be our first support zone, and this would be our second support zone if in case the first support zone is breached. That would be 20,860. So these are the key levels to watch for for the Nifty Midcap 100 index. So next we are going to take a look at small cap. So small cap is also in a very good trend, as you can see, a clear, amazing bullish trend without any decent pullback. It has given like better pullbacks than the mid cap, as you can see, but still the trend is overall, the trend is very bullish, and it's very strong, stronger than Nifty. Mid cap and small caps are outperforming Nifty. If we go to daily time frame, as you can see, it also gave a pullback few weeks back also. As you can see, more than the mid caps didn't fell that much. Small caps are more volatile. It gave a decent pullback few weeks back and again resumed the trend. As you can see, again 2-3 weeks back it again gave a pullback around 17% pullback, and again it tried to reverse from this level. And on Friday, as you can see, the Friday's candle is not very encouraging. It's again a sign of trend reversal. It can resume the pullback, the short-term downtrend. So these are the key levels. So let's mark the key levels. This would be our first key level of 10,580. This would be the first support zone for small cap 100 index, and this would be the second. So these are the short term, for like 1-2 week time frame. These are the key support zone, and again for the reversal confirmation it has to cross 11,300. If it crosses this level, then there are high chances that it would resume the uptrend and will head for the all-time high level. So let's mark these levels on chart. So this would be a reversal confirmation level, reversal confirmation 11,300. This would be the reversal confirmation level, and this 10,580 would be the support zone. First support zone would be the 10,580 would be the first support zone for small cap index, and 10,400 would be the second support zone for the small caps for next 2-3 weeks. If it breaks these support level, then next level would be around 9,500 something. If in case it breaks these two support zone, it's a strong support zone, so I don't think so. If there is not a clear trend change, then I don't think so this level would be broken. And if in any case it gets broken, then this would be a very strong support for us, 9,570. That's with the last line of defense for the small cap index, that is around 9,570. 570 bits. So these are the key levels that you should mark on your chart and trade accordingly. Now let's take a look at Nifty IT. It has, as you can see, the broader trend. Again, the broader trend is even stronger than Nifty. It gave a consolidation around this level. It consolidated and then again had started heading higher. So right now also it's in a consolidation phase. As you can see, it's taking a break and currently underperforming Nifty. It formed a kind of a double top pattern here and again a double bottom here, and it hasn't given a clear breakout on either side. So right now it's in consolidation. Right now it's in clear consolidation. It hasn't given a breakout neither on the upside nor on the downside. So our first level would be this whole zone of around 37,200, 37,300 to 37,770 on the upside, and this would be our support zone. So as long as this would be the resistance zone, as long as it's trading between this zone, there's nothing we can do in IT in IT sector. If it gives a breakout or breakdown on either side, if it gives a breakout, if it crosses this zone, then it can easily head higher, and if in case it gives a breakdown, then the trend would be negative and there are chances that there would be further fall. So let's move on to the Nifty Auto sector. Let's take a look at the broader trend. It was clearly underperforming Nifty. From past few weeks it has started, as you can see, it has started outperforming Nifty. In the same time Nifty was, like, as you can see, Nifty was down, Nifty was going down and the auto index was going up. So it has started outperforming Nifty, but right now it's facing a resistance around its all-time high level of this. The top was made in December 2017, all-time high level of 12,180. So let's go down to daily time frame. As you can see, it's facing resistance at the all-time high level that we saw on the weekly charts. It's facing, as long as it is below this level, there's not much like, it would be better to wait on the sideline and let it cross this level of 12,108. This is a very strong resistance as it is all-time high level. Above it, it can easily move to 13,000 or 14,000. And as for the support, as long as it's above this level in the short term, like 2-3 weeks, as long as it is above 11,807, our short term trend would be positive. Like, it can consolidate a bit here in this range and then give a breakout, and if in any case if it goes down like this and breaches this level, then the trend would be clearly negative. Short term trend, I'm talking about short term trend here. So as of now, there's nothing much to do in the case of auto index. Let it cross the all-time high level and let it pull back, and again it can easily pull back and again try to cross the all-time high level. So as long as it doesn't cross the, it doesn't give a breakout and crosses the all-time high level, it would be a wise idea to sit on the sidelines. So the last index we're going to take a look at is FMCG index. So as you can see on the weekly chart, trend is like, it a very big reversal candle. As you can see on weekly charts, very big bearish candle. The trend is not that strong as compared to Nifty net. Trend is not that strong, and on the daily chart it's clearly bearish. As you can see, so many wide range candles, so many big wide range candles. It clearly signifies the bearish trend in the short term. Like for next 1 2 3 4 weeks, the trend is clearly weak, very weak trend. It's among the weakest it's the weakest chart. amongst the we saw today among the auto, IT, mid cap, small cap. So right now it's trying to reverse. It took a support around this level of it took a support around this level of 37,880. So right now it's trying to reverse. So short term in the short term it need to cross this level of this would be the reversal confirmation level, that is around 39,400. This would be our reversal confirmation. In case it crosses this level, then it can try to test the all-time high level again of 41,800 something. It can again try to test the all-time high level, and this would be our support zone, 37,880. That would be our support zone. 37,880 would be our support zone, and if it breaks the support zone, that I think is very much possible, then there would be a further fall. It can, after that, if in any case it breaks this level of 37,880, then our next support zone would be around 37,565. Our second support zone would be around 36,565. So these are the key levels to watch for in case of FMCG index. So this was it for today, guys. We covered Nifty, Bank Nifty, Mid Cap 100, Small Cap 100, IT, FMCG, and autos. So keep these levels marked in your chart. Let auto index cross the all-time high level, and let Nifty give a clear direction if either a breakout on upside or downside. And the small cap and mid caps are currently weak. Even Nifty is also in a bearish trend. Bank Nifty is set for a reversal. There are high chances of reversal because this is a very strong support zone. So you can mark these levels in your chart for next 1-2 week, and then on next Sunday we'll again review how this week went and what's next. So thank you for watching the video, and in case if you enjoyed the video and learned something, please consider hitting the like button, and don't forget to subscribe, share as much as you can. Thank you.